Hello everyone, today is Tuesday, June 9th, 2020. My name is Evan and welcome back to another midweek market recap video. We're going to jump right into our market technicals dashboard here. You can see stocks were down today, which is something we haven't seen in some time. This is a little bit new, different, and unusual. Stocks don't go down anymore. That's the new script of the past 2 months. And it's funny how that really is kind of the underlying joke, maybe a little cynicism now on markets not going down. But really, you know, we've sort of been conditioned in this melt up mode, which really does continue. We had a down day today, but certainly the trends, the longer term trends that have been in place for the past couple of months at this point have not broken down. We'll talk a little bit more about that later, but you can see, largely speaking here, negative, of course. We still have the NASDAQ, which outperformed nicely, and this is also a little bit new and different because, as you recall, for the past 2.5 weeks or so, the NASDAQ has been the underperformer on a relative basis. Many of the NASDAQ stocks had been taking breaks, moving sideways, and now we can see we're getting that switch, that rotation, if you will, and this is sort of the hallmark of markets that continue to grind higher, is that we see rotation among sectors rather than money really leaving the stock market, so to speak. So that's kind of what we're looking at today. Russell 2000 down almost 2%. But if we look at the 5-day change numbers, again, you can see a little bit more about what we mean in terms of the Qs underperforming on a relative basis. You can see over the past 5 days, still up 3%. So obviously, you must take that with a grain of salt. It's all on a relative basis, but certainly the Russell 2000, the Dow Jones, up 6% over the past 5 days. That's where all the strength has been. We are above the 10, the 50, the 200 SMA across all of the major indices. If we scroll down a little bit further here and take a look at sectors, you can see the XLE top of the list here, followed by financials and industrials. Not a whole lot has changed. We spent a lot of time sort of talking about these areas of the market in our Friday recap. At the bottom, we have biotech, which is now negative here over the past 5 days, 1.13% to the downside. XLV, healthcare, kind of the more broader outlook on or sector composition of the IBB. And then we have staples, 1.12%, still positive, but underperforming on a relative basis. In terms of major markets, oil, S&P, and AQQX. Again, this was one of the new sort of insights or things we focused on in our Friday video, is that international markets are working again. We're starting to see them actually outperform the U.S. markets. So that's something, again, we haven't seen in quite a while. On the downside, silver, TLT, IEF, basically your fixed income bond funds here, and then silver, of course, they're taking a little bit of a breather after the big run-up that it saw. So with that, let's jump into the charts here with our equity view. We're looking at TC2000. We're looking at our smart trend filters indicator applied. Those are the colored yellow dots on your screen. The white dashed line is price itself, and we're looking at a weekly time frame. So if we look here at the S&P 500, you can see we're in bullish trend here. We've been in bullish trend now for 3 weeks in the S&P 500. We continue to stay well above our trend filter here, so nothing has changed there. NASDAQ 100, again, you can see here on the top right, notice the trend filter is very positive, been here for 6 weeks now above trend. We have seen a little bit more of a sluggish move on to the sideways, but because this indicator is based on volume, we do want to wait till this week plays out, but still nothing really changing across the board. Bottom left, Russell 2000, bullish trend. Bottom right, AQQX. Again, this transition, the latest here, this was last week, finally moving into the bullish trend here. So this one's late to the party in terms of relative basis, but still acting pretty strong. On a daily chart, again, nothing has changed here either. We've been in uptrends now in the S&P, the NASDAQ, the Russell, the AQQX for multiple weeks here. On the daily chart, we've had a little bit of yellow transition, a little bit of noise in this trend, but especially looking at this trend filter here, it has kind of picked it up nicely and has continued to work to the upside. So that's the backdrop we're working with. Trends remain higher, and therefore, in this state, by default, we should expect that prices continue to move higher, and that's exactly what we've been, what we've seen and what we've been looking at. The issue, of course, is just how vertical the market has gotten, how relentless and how overbought on many metrics the market has been, and that's certainly where some of, again, that cynicism where I kind of opened up the video, and I think you're seeing a lot of the sentiment out there, even on social, where, the sort of, the common way we view this market now is, just buy anything, things go up, stocks don't go down anymore, buy the bankruptcy stocks, there's no issues there, right? So these are the types of things, these are the sentiment that you see in the market right now, and that I think is some signal in itself if you can kind of decipher in there and read in between the lines, but when we look here at the S&P 500, we know our trends are higher, but we know that, given the fact that things that have already declared bankruptcy, like a Hertz, right, and a JCP and other things are continuing to, I think this already went Q, so yeah, I'm not sure what the new ticker to pull that up is, but the point is we're seeing a lot of froth out there. And I think that's what, again, speaks to potentially the fact that we're in the phase of some type of exhaustion exuberance. We talked about that on Friday, the fact from just a trader intuition standpoint here, put call ratios at extreme lows, all of the sort of classic reversal, overbought, oversold metrics you want to put on here kind of speak to warning signs being thrown in this market. So when we look here at the S&P 500, you can see, again, nice smooth uptrend here. Price has been working higher. The next relevant big level here is the gap fill, is the open gap, frankly, back from February. We talked about this in Friday's video. This opens up around 32.59, call it 32.60. You can see we haven't got back up there yet, and it certainly fills back up here around 33.28. So if you're kind of a student of gaps here, if you like to trade these types of patterns, or if you're a believer that gaps like to get filled, that I think is your next relevant upside target. I have no idea if we get there in time before this market takes a bit of a breather, but that's certainly where we'd be paying attention to on the upside. On the downside, 31.30, that is the relevant level. That's the gap up that we saw, the big Friday gap up on the better than expected unemployment data. That is the level I'd be paying attention to. It also coincides with sort of the highs here from this reactionary bounce back in March. So on the downside, if we do see some selling pressure, if we do see continuation lower from today's move, then 31.30 is the next spot that I'd be paying attention to, and that comes in right around another 2.5%, almost 3% down in the S&P 500. So that's sort of the way I'd be looking at the S&P right now. If I look at the IWM, this year a little more concerning in the near term, mostly because, well, first off, we can see that it poked its head above this 152 area here. Remember, this was the reactionary bounce for it back in early March. So we got right above that level. And notice this little 3-bar pattern here. This can be a dangerous one. So it's something to take a look at. Basically, we essentially had we had this big gap up again on Friday. This is the better than expected unemployment data. So we had this big move up here, and then we had sort of a weak close on Friday. So we did talk about that. And then Monday we came in and everything was all right again. The market was bid up. We made new closing highs, and now here we are today, totally falling, kind of a gap down and falling below all of the supply traded here from Monday. So you have a little bit of some trapped money here on Monday for anybody that was sort of late to the party here, buying up or looking for momentum to continue. You're a little bit stuck now, flat-footed, and with this gap down here today, I think tomorrow sets up a potential, right? It has the potential to be a bear victory if we see some selling pressure, right? If we can actually get some type of follow-through selling tomorrow, if we start with a gap down, or if we proceed to sell off tomorrow, I think you'd have the signs of at least putting in some type of short-term top there. Again, we know the trends are higher here, so I am not looking to go out and be a hero and bet against the trend, but a few shorter-term tactical traders are looking for signs. I think you're seeing the signs right now. You had the big gap up on Friday, follow through Monday, and then with this weakness and gap down here, wouldn't it be something if we just totally gap down all the way back down into this level tomorrow, we would need a big catalyst. But imagine opening up tomorrow around 145, 146 and really leaving some type of island top up here. That would be something that would certainly put a damper on the enthusiasm. And who knows? It's certainly in the realm of possibilities. I'm certainly not betting on it personally, and I think it's a low probability event, but it certainly would be something. Let's just at least look for potentially the sell-off here tomorrow to start to work itself back into this gap, 144. That's what I'd be paying attention to. And if we looked at the NASDAQ 100, finally, this here is just back to, kind of leadership mode. So really, as we sort of talked about and we looked at the top of the video is some of the recent performance, the NASDAQ kind of went to sleep here for 2 weeks. And when it went to sleep, we saw the Russell 2000, we saw the more beaten up, the higher beta names, the industrial things that were starting to work in this market, financials including. And now that this has kind of, slept, worked off its sort of overbought readings, moving sideways, it looks like it's back to leadership status here, and it wants this just sort of calmly and cool, calm, and collectively break out. So the Qs back to its leadership mode, blue skies above us, all-time highs here. I mean, this looks good. It's certainly extended on lots of different metrics here as well, but it has, arguably worked itself off a little bit in the short term over those past 2 weeks, and there it goes again. So that's kind of the real rundown here on all of the major markets. If we look briefly here, I want to look at a couple of other individuals. If we look just really quick though at some of these other screens that we like to look at, credit, I don't really want to mention too much about that in this video. Volatility, bottom left here, you can see perking up. We're going to talk about that a little bit. Let's go to a daily chart of VIX. So take a look here at the VIX bottom left of my chart. We've got our smart trend filter applied here. Notice it is still bearish, so we still have a bearish sell reading here. It hasn't even transitioned up to neutral, but it has been perky here in the past couple of days. If we take a look now just at VIX from a price action perspective, what I'm looking at here is just the fact that, we kind of lost this $28 area in the VIX last week. We talked about the fact that it originally sold off to about the lower or upper 20s in the beginning of May. Found some support there. Market just found some sideways sideways kind of protection in this general area for the VIX. We started to break down late last week below this area, and now here we are again very quickly kind of coming right back like a magnet to the upper 20s. So there does seem to be, especially these last 2 days, look at the move today was up 5%, but the day yesterday even, the VIX was up 5% as well, while markets were moving higher. That's something that, it happens. It's not the common event. Usually these things are moving fairly inverse to one another. What I think is also more interesting here is if you look at the VVIX, which is the volatility of volatility, what you'll notice here is that basically as soon as the VIX started to fall below that 28 range there, that 28 level that was holding kind of firm last week, as it started to fall below there, you actually saw the demand for VIX, right? So we're basically going to simplify it to say the demand for protection, oversimplification, but the demand for protection was increasing as the VIX was breaking below 28 last week. So you had a little bit of an early sign there in the VVIX. VIX here is continuing to move higher as well. So again, in the short term, you've got a little bit of some near-term warning signs with things like the Russell that have this little ominous looking 3-day bar pattern here. You get the VIX perking up. You can look at some individual sectors like the XLE, right? This is the frothy area that had been charging higher and in fact is still the best performer over the past 5 days. Take a look at this here, just like the IWM, right? We had this exciting rally here on Friday. This certainly did close strong though on Friday as well. We saw more follow through yesterday on Monday, and then we saw again this gap down today, kind of leaving behind a lot of the supply here from Monday. So again, if we do see more follow through selling tomorrow, another gap down, or just selling tomorrow, this here would be in a sort of dangerous looking short term spot. And last but not least, if we look at XLI here, it's kind of very similar, right? So again, this is where we saw a lot of that exuberance. We had the big gap up, had Monday follow it through, and then we see a more really more islandy looking single bar pattern here in XLI, where Monday's traders who are getting long industrials are basically have not been able to be made whole in any of the purchases from yesterday. If we do see more selling pressure, again, we just have more forced sellers, more people at a loss here for the first time, in the past few weeks. So that, I think, kind of covers everything that I wanted to mention. I think in the short term, the shorter term traders there have a little more to hang their hat on, get a little more volatility, potentially a little more cross currents, and we'll see how this all certainly shakes out into the end of the week. But that's all I have for today. So thank you for tuning in and watching. Every Tuesday we do midweek videos just like this. Also on Fridays we do our in-depth long-form tour around the world, looking at more holistic view of markets. So make sure you can subscribe to our YouTube channel to stay up to date, or just follow us at thetraderisk.com. Thanks so much as always, and we'll see you back here tomorrow for some trade ideas during the market session.